Hi, everyone. This is Devins Financial Weekly Stock Analysis Newsletter. Today is August 13th, 2017. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's take a look at current market trend and our strategy. Your stock market is now in a sideways. I'm currently mostly in cash and anticipate market will continue stay in a sideways or maybe go downtrend for a little while until October. Let's take a look at the indices and their charts. German DAX index is in a downtrend. Right now it's sitting right at the 200-day moving average. It may rebound from here. This is a major support level, so it could rebound. But even if it rebound, hit the 50-day moving average, it's still a downtrend. The whole moving average has moving to the downside. Nasdaq broke 50-day moving average on Thursday, and on the down days distribution, the volume is high. That's a distribution by the investors, institution investors. The big money guys are selling into this market, and that's why you see on the down days, which is the red bar, and market is the volume is higher than the up days, which is the black bar, and market broke 50-day moving average. It has a potential to rebound, but for now, let's don't assume where market is going, and just assume it may go down for a little while. SP 500 broke 50-day moving average as well. In the past, every time it broke 50-day moving average, it wouldn't end up going up. But on the first updates, you always see a little bit higher volume going up, and then continue go up for a few days before the uptrend was resumed. For now, we don't assume that will happen. We don't know. It's possible market may rebound a little bit, but for now, let's just operate in such a way that market may continue go down or just stay in the sideways. Another sign stock market is not doing well is at the gold. Gold price has broke above the previous resistance. Last week we talked about this is a resistance, but it broke above. So gold price right now has a potential to continue go up. Gold and the stock market tend to go with a different direction. So when the market goes down, the big money will move money to gold. Vice versa, when the stock market goes up and they take money out and buy stocks. So those two tend to move in the different opposite direction. So the gold is giving us a hint. The risk is high. There's usually when there's a crisis or especially the war breaking out or all these crises will cause people to move money to the safe haven, which is gold. So right now, gold is actually going up. Silver also went up. Last week, it looks like it's about to roll over, come down, but no, it went up. So that's an indication the risk in the stock market is high right now. Gold mining stock ETF went up last week as well. Crude oil price seems like it's about to roll over. This is following a downtrend line. China Asia market also came down last week. Right now it's sitting right at a 50-day moving average. If it broke 50-day moving average, China Asia has a potential to come down. China ETF came down. So this is broken down. Semiconductor ETF came down. Now this is official in the downtrend line. So it makes lower highs and broke 50-day moving average. So came down. Semiconductor usually lead the high tech, and the high tech usually leads the general, the overall U.S. stock market. So the fact that semiconductor index is coming down, that's indication market is not doing well. 3 times high tech ETF. This is the one to be avoided. We should avoid TECL. All these 3 times ETF need to be avoided right now. BOTZ is a artificial intelligence ETF. It looks like it's about to roll over. FAS, this is a financial ETF. Last week looked okay, but the week before last week it looks in the uptrend, but last week this financial sector also turned down, turned to the downtrend. Right now, this is a risk. FAS, all these three times bull ETF should be avoided. QQQ is a one-time ETF tied with the Nasdaq and came down as well. Don't buy those. ROBO, another artificial intelligence, robotics, and automation ETF. Looks like it's correcting as well. It came down from the high and it's hitting the 50-day moving average. Semiconductor ETF, this is we look at semiconductor index, right? SMH is a semiconductor ETF, broke 50-day moving average. Social media ETF, sitting right at a 50-day moving average. This look very much like a double top. So let's see where it go next week. Can it go back up or will break down? So right now it's sitting at the support. That's a market indexes. Let's take a look at a few stocks. Let's look at the major stocks. Apple. Uh, Apple is still in an uptrend, but this Thursday is a distribution day. Volume is high. Market came down. And after report earning, Apple gap up, but it looks like it's about to fill that gap. So after they gap up, Apple did not take off. That's a sign investors are not very aggressive in buying into the market. They're probably looking for opportunity to sell this market. Adobe, you can see the volume and down days are higher than the up days. This bar is a volume, this how much shares is being traded on that day. The red bar is a down day. The market closed lower than the open price. And the black bar is up day. The market on that day closed higher than the open price. So as we see on the down days, volume is higher than up days. That means there are more sellers on that day pushing the stock price down, actually dragging the stock price down. So this this volume is very important to watch. When you see a lot of days in this period of time, volume is high on the down day, that means you have a lot of sellers in this market. Although Adobe stock is still in the uptrend, because of this volume indication and the market, this this stock has no buyer basically. You don't have enough buyer compared with the sellers. You have more sellers than buyers. Therefore, the stock probably the best you can hope for is going sideways. It may come down. AMD, this is a stock sitting below 50-day moving average, right at the 200-day moving average. This is a very volatile stock, moving up and down a lot. Right now, it's still in a long-term uptrend because it's still above 200-day moving average, but it has a nice drop from a $15 all the way to $12. So that's a big drop here. We should see what's going to do next. Amazon is a clear sign it's been distributed. Amazon, after report earning and hit a high, but it came down on the same day. Technical indication, this is called one-day reversal. Market open high, hit the historical high, but cannot hold that high. The seller came in and sold into the strength and then drag the stock down, and it keep coming down and invite more and more seller to sell this stock, and volume is very high on the down days. So Amazon is to be avoided based on this chart. Don't issue any new buy. Let's see where it's gonna do next. See if it's gonna have a panic sell. If it have a panic sell, you may want to play a little bit of rebound, but still that's quite risky. It's much better to buy a stock after it build a base and break out from the base going to the upside. Then stock like this has gone up a lot and made a high, cannot hold a high and come to the downside. So buy stock like this during this time is kind of risky right now. So let's hold off any buy. Just wait. Activation. This is also an uptrend stock, but right now sitting at a 50-day moving average. You don't see a lot of distribution going on for this stock. There's some red bar which is higher than previous bar, but overall it didn't have massive distribution yet. But again, it doesn't have a lot of force to push it up either. Alibaba is in an uptrend, but you see distribution here. The volume is higher uh, in the down days than in the up days, so we see a little distribution here. CELG, this is a Celgene U.S. biotech stock. We see distribution here. Those high volume down days, those are distribution. CGNX is a okay. This is a belong to the some kind of a factory automation. They do machine vision, and they also bought some computer vision company. So it's belong to kind of like AI, but they were traditional manufacturing machine vision company. Try to get into the AI area. Reported earning, market went up and gap up, but second day could not hold that high, just came to fill the gap. So right now it's still in the uptrend. Delphi is an auto driving, the self-driving car company in the uptrend. This one has no distribution. We don't see clear sell-off by the institution. Facebook also in the uptrend, but you see one wave of a lower highs, lower peak. That's not very good. And the volume is well, this is a high distribution. Those are little distribution here. Volume is high on the down days, but the mainly because of this lower high. So also to be avoided. Don't buy new stocks in Facebook for now. Google after report earning gap down, continue come down. Very big distribution for Google stock. High volume on the down days. Microsoft is holding up pretty good. It's still in the uptrend. It held up the 50-day moving average. It has a little bit of distribution, but not that obvious. So Microsoft is considered to be strong in this market. Netflix gap up on the earning, but came back to fill the gap for that earning. And recent weeks has some distribution days. Nvidia, this is breaking down 50-day moving average, gap down after earning, and with a high volume on the day right before report earning, it must be a news leak. And earning was supposed to report after market close on Thursday, but before the market closed on Thursday, the stock already came down and the volume is high. So someone get hold of that earning. Looks like there's I mean, from technical point of view, it looks like there was a news leak. And people knew the earning had some problem. Although the earnings seemed strong, but certain things were not quite right. So second day, the market gapped down. So Nvidia is to be avoided for a period of time. The stock need to repair itself. This chart need to be repaired before we can buy this stock again. So let's avoid Nvidia for now. I actually sold Nvidia. I bought a little bit of option, but that money was lost. So I bought call option and put option. The put option I made a little bit, but not enough to make the money lost from the call option. So this trade was not good. This earning on Nvidia, the trade on this earning is not good because mostly because the Nvidia did not move big enough. It moved 5%. It didn't drop big enough. And the last earning was good. Last earning went up 20%. So option trade on last earning, that was a good trade. But this earning season was not a good trade for Nvidia. But anyhow, that's a different strategy trade option on earnings. But for now, let's just take a look at the stock. Viva System, this is a software company in the healthcare software sector. Broke down 50-day moving average. It's totally, well, this is in a downtrend now. So that's for the watch list. What to do in this market? Continue stay cautious. Mostly in the near future, there are more reasons to sell stock than buying. I'm talking about investors, the institution stock investors. And first of all, we're at end of the earnings season. So for this earnings season, the major companies have already reported. There is lack of good news. There's not enough good news to lift up stocks in the near future. On the other hand, there's a continuous talk and nuclear threat from the North Korea. Every time there's a talk like that in the news and tend to affect the market. So that's not a good news for the market, tend to drag down the market. Well, another thing is the debt ceiling deadline is approaching. If by early October, if we don't reach the debt ceiling, if the Congress did not reach a agreement to raise debt ceiling, and the government has the potential to shut down, and so whenever there's a discussion about raise the debt ceiling, there's a voting going on. In the past few years, whenever during that period of time, and market tend to go down, it's not a good news for the market. So we have more bad news coming in the near future than good news, and for that reason, and plus the market has already shown technical indication that institutions are selling into this market. So for all this reason, I would stay in cash until perhaps October, and let's keep watching the market. But in the meantime, we don't have to be in the market all the time. We can watch it, but we don't have to put money in the market. So that's what to do. Anyhow, that will be all for this week. See you next week.